And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from a lovely Westlake Village, California. It's bright, it's early, and they don't call it the CPI report for nothing. Yes, inflation came out lower than expected. And the consensus for month over month was 0.2. We came in at 0.1%, which is bearish for the dollar. Inflation year over year came in at 4%. The consensus was 4.1%. And core inflation, the Jerome Powell gauge, whatever his favorite gauge, like Warren Buffett has his favorite indicator. This is Jerome Powell's favorite indicator, core inflation, and year over year came in at unch or even. That is 5.3%. So, not only are we going to talk about the dollar, Bitcoin, and NASDAQ gold, we're going to throw in some Tesla, as Tesla just had its 12th straight day of gains. And just taking a quick look here at Bitcoin on the 4-hour time frame, we talked about breaking the range to the upside. Volatility is just beginning to expand. Here's what I want to be aware of, though, on days like today, where there's going to be a lot of volatility in the market, is sometimes going into the inflation report, the market goes one way, right? For this instance, it went up. And then what happens is essentially they grab the liquidity and then push the market back down. So I think all eyes are on the dollar right now. The dollar rules the market. And as we said, as long as the dollar makes a higher low somewhere above this green box, well, it's going to be pressure onto the downside for risk assets, despite the NASDAQ's, parabolic blow-off rally here. It is losing steam on the daily time frame. From what I can tell, you can see volume slightly dropping off there. But, again, I want nothing to do with that. So back onto Bitcoin, 4-hour time frame. Most of the altcoins are kind of doing the same thing. They're testing that 9 exponential. And if that continues to govern us to the downside, well, that's another point for the bears there. Declining volatility on the daily now. 3-day is still way down there. And the 2-day is just beginning to get lift off. And momentum is crossed the downside. We'll cross up today on the 2-day time frame above 26,400, and the 2-day will close today. So today, the line in the sand is 26,400. That will cross momentum back to the upside, and essentially, let's see if that 4-hour range actually broke on a wick-to-wick basis, depending upon where you draw it. But technically, still not quite there. We did break this level right here at 26,091. So a bit undecided here. Momentum will cross back to the downside, 2657. And currently the Fed rate hike tool says now 96.4% chance of a pause tomorrow. That would be bullish for the markets. So if we don't get a surprise tomorrow, well, it looks like, Bitcoin could pick itself up by its bootstraps. And again, real invalidations for me on the daily time frame for our downside targets not to get hit is a daily closure back above this wick here at 28,450. We have to get above this trend line. Right now, we're just consolidating on the lows, kind of grinding up against the lows. And typically, you get a continuation downside play in those instances alongside the bearish divergence we identified on the 3-day time frame, coming all the way back from this prior high back here and this one back here on the 28th. That was May 28th. So about 2 weeks ago, another high confirmed. Actually, it wouldn't have been confirmed until this candle right here. So getting a nice little backfill, and then pressure is on to the downside. Again, first warning sign is going to be a daily closure back above, what do we say, 20. Well, now it will cross up on the daily above 26,137. So essentially above that 9 exponential, or I would say this pivot right here. Yeah, 26,215 would confirm this as a bit of a higher low. And then would you have any divergences playing out perhaps from this pivot right here? This isn't a clear stop and reverse point, so I wouldn't necessarily want to use that as my, my higher low pivot, but technically on a candle closing basis, it is a higher low, as that is a red candle. Hopefully that made some sense for you guys there. And other than that, I think I said I would check in on NASDAQ, which, just again, checking in on this because I think it is important. We talked about the 618 and a potential bull trap. We've now broken the 618. And we said the next target would be that 786 right there. And again, last hope for the bears would be something like this. We play off that 786 back down to the 236, and then we lose that area. Sometimes the fibs can play that way. But with rates coming down and S&P 500 is up 13% this year. NASDAQ is up 29%. The Dow is only up 2.5% year to date. That doesn't look right. Year to date, January. I guess that looks down to me for the year. Unless I'm completely off, and I was, yes. So we're only up 2% for the year on the Dow because the Dow started out the year here. 10-year yields, just checking in on the bond market real quick because they do play a role in our entire economy, and it's good to be aware of what's happening over here. 2 years down. 10-year year to date, though, is down 2.49%. The 2-year is up 3.87% year to date. So are we going to get a spike in bond yields as the U.S. Treasury tries to sell their bonds? I'm interested to hear about the auction. I do believe it says today there's a bit of an auction, 30-year bond auction coming in at 3.74%, and the 52 weeks, so the 1-year T-bills, going to be coming out today. And then let's hope, Mr. Jerome Powell doesn't give us and PPI is coming out tomorrow. So definitely, all eyes on the FOMC economic predictions tomorrow. Going to be a good day to grab a pizza, watch what the guy says. Are there things tipping us off in the direction of the market? Well, I'm sticking with my bias on the dollar, whatever the dollar does. Typically going to, expect an inverse relationship on risk assets. Again, Ethereum did break the critical pivot of 1750. Technically, guys, we were talking about this inverted head and shoulders coming back, saying we didn't want to see the left shoulder break, or specifically 1750. We did finally get a closure, but you want to see the closures hold below specifically and, remain below that level. So we're just hanging on. Looks like it could bounce, to be fair. But overall pressure is going to be on the downside for Mr. Ethereum as long as we're below this pivot at 1858. Checking in on Pepe, and like I said, some of the altcoins that took big spills down did just take almost a bounce up to the 9 exponential, and I think that would be fair for a lot of the altcoins to play back up to the 9 exponential. Cardano kind of doing the same thing. Mana has quite the distance to go, and usually in these situations what I like to do is pick the ones that have the farthest distance to bounce. What else is kind of, something to note? U.S. government spent more than it earned in May by a lot, so that's kind of to be expected. And this year we've already seen more debt defaults in the U.S. junk loan market more than all of 2021 and 2022 combined. And, obviously consumers are becoming more optimistic about inflation we just came in at the lowest level that we've seen all year pretty much. What else is on the news shuffle? So we covered that. We covered open interest coming in at $8 billion. So pretty inconsequential. Funding rates you're still paying to go long. And we are still at the edge of the neutral zone. So we haven't got the big explosive move. We're talking about a 20% move on Bitcoin at a minimum. Perhaps even I'll go a little bolder. I'd say we're going to get a 30 to 40% move off the weekly volatility read. So as this has been pinned on the floor, as we get expansion, you'd expect 30 to 40%. I'd say 35 to 40% in either direction. Typically, price action goes in the direction of the stochastics. Additionally, you would expect, when you see this kind of signature right here on the PMARP, by the way, if you want to learn how to set up TradingView, you can go to our free link. There's a link in the description of our YouTube channel, or in this video. There's a link below called Free TradingView Tutorial, and needless to say, you cross the PMARP like this to the downside, typically not a bullish signal on the weekly time frame. Just lastly, bringing up the Gaussian channel, as I want to take a look at it myself here on the weekly time frame and just see where we're at in the overall scheme of things. And it would not be a far cry for us to test this region at 24.8. As long as we hold above there, remaining bullish. Bitcoin on CMEs, we're coming into Wednesday tomorrow, so you can see, pressure is building here on the, the tightness of price for CMEs and a test down there. 24/7. Tether dominance pulling back a little bit today. It looks like the opposite of Bitcoin in a sense. This is putting in a little bit of a top and, providing some relief for the altcoins. Is momentum crossed to the downside? Not yet. Has to get below 810 today. We're sitting on the edge right now. So perfect cup and handle formation. Essentially, you want to see a bounce from this 9 and continuation of the upside. Just by ticking above this wick, very likely, I think we do continue the top side of the triangle. And that would obviously hurt some of the altcoins. So is the damage done in the altcoin market? That is the question here. And, according to Ethereum Bitcoin chart, getting slack there Wednesday weekly time frame, back below the Gaussian channel, rejecting from the Gaussian channel. So, Benjamin Cowan calling a big pullback on this one, which fair to say that, most altcoins are going to get obliterated, especially if you start cracking back below this level, not 5.3, then it's going to be lights out for some altcoins. And another warning sign is going to be tether dominance breaking out to the upside. Bitcoin holding it in at 26.1, just following up on the day. What are we looking at specifically now that the 4-hour range has broken to the upside? Well, specifically what I'm looking for right now actually would be something like this. If Bitcoin wants to stretch its legs out a bit more, I do think it'll start with the dollar. In fact, the dollar downside target is this level right here. Where do I get that? Well, it's simply off of this wick to wick, almost body to body here. So a little bit more down to go. So we're almost at the 1618 fib off of this 4-hour consolidation as it broke to the downside. And if the dollar starts to essentially take out these lows. I think we can get a little bit deeper, but overall suspecting that the dollar, yeah, so inflation's going down, dollar's getting pushed back. And the question is, you know, is the Fed going to be satisfied with it? Is inflation coming down fast enough? And are they going to pause tomorrow? So we'll be back with another video. If you did enjoy some of the content, please like and subscribe. And what else did I want to bring up with the dollar consolidation here? On the 4-hour time frame, yeah, we're pretty much down to the level, looking for a bounce there. So you are now in a 4-hour downtrend. So I'd be waiting for the 4-hour downtrend to break back to the upside before I'm ready to at least call a temporary bottom in the dollar, which could provide some relief for Bitcoin and some of the altcoins. Checking in on gold really quick, and we've been talking about a bounce target of about, well, that's all the way up to 2,000 an ounce. I'd say closer to 1985 before perhaps playing out a little bit more downside if we get a volatile move. So if gold's going up, dollar is going down, and that's what we're seeing right now. In fact, dollar bleeding out on the 15-minute time frame, on the hourly. Where did I get that target there? A little bit of a deeper target off the hourly. Let's see, that's where I'd expect a bounce on the dollar. Okay, needless to say, dollar's going to rule the market, and as the dollar goes down, typically gold goes up. So that would line up with a little bit more of a bounce somewhere between the 0.5 and the 618, which I guess I can move this box slightly up. So that would be, you know, almost an official retest. This would be a nice sell, in my opinion. I don't know. Sounds a little bit crazy right now, but, you know, gold could get some attractive offers coming in towards the end of the year if the recession narrative does play out. Last thing, I guess I'm going to circle up on here. Nope, I think that's it. I think I covered it all, guys. I hope you definitely oh yeah, I said Tesla. We're going to take a look at Tesla as they had their 12th straight day of gains. Probably helping out the NASDAQ, so pretty nice gap. I think we went over this on the live stream yesterday. There is a gap to the upside and to the downside. And 4-hour time frame, let's see if it is going to rule the market here. And we did say this, any kind of a 4-hour closure back above this pivot, likely going to fill this gap first. Coming in at 262. If we get a 4-hour back below 242, then going to fill this gap first. So what is price action likely to do? Give the most pain in the market, you know, get a whip up here and a whip down there, and then picks it on up maybe for a new all-time high. Not financial advice. I'm not a financial advisor, and I really don't trade a lot of Tesla stocks. So that's that. NVIDIA, parabolic, gap up, craziness. Is the craziness going to run out? Yeah, Tesla upgraded on investments in AI. That's the report today. How's the Apple making new all-time highs? Making new all-time highs. Nice little cup forming there. It's fun to check in on some of the stocks every once in a while. Let's see what the other currencies are doing really quick as we got the euro, the yen, and the CNY. So bond yields down a little bit today. And then currencies right here. The euro should be popping up, and so should, yeah, they're all popping up a little bit as the dollar is coming down. So they play inversely to each other. And as you can see here, you know, retest can come all the way up to this level here, but overall downside target for the Japanese yen. CNY is already hit our target, broken it down. I think that is the second target down. No, we just hit the second target. That was our first target. Here's second target hit. So good job there. Euro not faring as well temporarily, but you got the silver cross to the downside here. So pressure is on to the downside. And I would say as long as we are below this level right here at 109, I wonder if parity is inevitable for this year. Looks like, short-term potential. And the last thing I want to go over is, again, why I don't like to trade these days is you get a lot of volatility around these events. And, you're talking about big moves to the upside, to the downside, and the news, it's the expectation versus the reality. So the expectation for the market was inflation comes down. It did, showing that what Powell's doing is working. That gives him the opportunity to pause next month. To pause tomorrow. The question is, does he want the stock market to make new all-time highs? So I think that's the X factor. Analysts from BofA and JP Morgan, they're pointing up to, strong pent-up demand across the industries with, cruises, and that means people are traveling still a lot. So the inflation numbers, they don't seem to be coming down when you look at the other data. So that puts more of a, call me crazy, but I think there is a chance he could raise rates tomorrow. Call me crazy, but otherwise it's going to signal that the market is in trouble. So he needs to pause. Otherwise, he doesn't want to break any more stuff. I just don't think there's enough broken yet. Maybe I'm wrong here. That's it. Enough rambling from me today. Hope you guys have a blessed and highly favored day, and I will check back in with you tomorrow. Take care.